All right, welcome guys. So today I will be looking at the power index that is offered by Quaco Market. Now, Quaco Market is another brokerage firm that actually introduced synthetic indices. Now, their synthetic indices is somehow similar to derived synthetic indices. You know what synthetic indices is? That it is a computer fragmented stuff that is actually simulated from the normal indices. Indices like US 30, NASDAQ, and along the line, we find all manner of things that we were not really expecting. Just like from the right, we have boom and crash. Even though we know that market can jump between the time of the closing in the country to the next opening session, but that wasn't like the same in the case of this. You know that the market was just moving and just spike, but that's what we have in boom and crash. So it's just like a method of actually also creating more tools to actually trade. So today we want to look at the power, the dump, the moon, the swift, or that is over by Quaco effect, making it an order opportunity and also the way you can trade it. Now, first off, this is just an educational video, and if you find it helpful, please subscribe, like the video, and subscribe to the channel. So let's quickly dive into it. Now, Paco Market, it's simple. You can just use my registration code, or you just type and just first of all find out, because I've checked out on TradingView. TradingView itself, they've advertised on TradingView, and for TradingView to actually also market them, then not that I'm actually saying they are all timid. I know they can't be. They will have their lapses and they will try as much to rectify it. But so far so good. Uh, People have actually given a positive review about today. And that's the same thing we have about the right. When the right just started, we have all manner of people complaining, and the right is still here till today. Many people complain that they will fold out, they will fold up, will do this. We hear this year in, year out, just because they are not a normal brokerage firm that people are familiar with. And these people still offer the normal instruments that you trade, like Euro USD, GBP USD, including Quaco Market. They still give you exactly the same thing, everything that you want to trade. Now, what catch my attention about this Quaco is that they are dump and the moon. It's not like boom and crash. It's a simulation of boom and crash, but quite different in a way that can make you a lot of money or can wreck you. So let's quickly dive into it. The first one we want to look at is the dump. The dump category is actually like crash. If you are used to crash, so this is something that looks like crash. Now, I actually just put this exponential moving average 189 and exponential moving average 44. Now, this was created by me. This is just a moving average to actually guide me on the trend of the market. And because this market spike, give a long spike. This spike that you can see here, if you look at it, this on 1 minute, and this singular spike that happened from here to this point, if you calculate how many minutes it will take for this market to cover it as an anti-spike, it's a long time. In fact, it can take more than half. It can take more than an hour. So if we somehow check this, when there was spike, you can see this singular spike that you have here. Probably that spike happened just once. Now this spike that happened just once, which is from around 133.3 to 132.6, this is 3 hours that the market is still covering that spike. So some of you will be looking at it like, really? So how is this one actually something that I can trade or I should trade? Now, just like I said, everything comes with opportunity. Now, they don't have to necessarily trade anti-spike. You can decide to trade spike, just the same way people catch spike on the right. So the question is, how did I understand the market? So The most important way of actually understanding every market is to first of all get yourself familiar with it. And that is what I did. I get myself familiar with it, that if I go to higher time frame, does this market still respect a normal analysis? Which I check, which it does. Okay. So if you go to higher time frame like this, it does. You can see there is a reaction to this level, and I mark this level, and you see the market pushing up from this point and going up. So this is a pattern, and it shows a reversal, and we have the reversal, and the market is reversing. You can see multiple week rejection, and the market is going up. Now you can see the market also failing here and going up. Now let's say this one look complex for you. Just candlestick. Candlestick on 1 hour show you trend. The moving average cross here, I said candlestick rather, moving average cross. Now the moving average cross show you here that the market is a downtrend. What did you see? The market come down. The moving average is showing you that the market is changing to upper trend. The market is still somehow changing. This is on 1 hour. You can go to a lower time frame to check the same thing. The same thing always occurs. This one shows you that the market has no definite direction yet. Not advisable to jump into the trade. Then here it told you after the spike, then you have little multiple spike, probably that would have given you profit and probably would not have. And also you have a crossover here, and it shows you that the market is ready for an uptrend. And voila. So I saw that okay, even though it doesn't look just as simple as it sounds, but it makes sense. I look at it and I said it makes sense. So I the moving average cross that I had just choose, and I saw that if I put it on 1 minute, in most cases the market respects it before there is spike. Now, first off, if you're actually going to start with, let's say, or let me use $100, or you can bring it down to any amount that you have the capacity. So what I checked was that if you trade 1.0 on this one, which is the dump 100, it's going to take out for free margin. It's going to take out around $65 for 1.0. That is huge. $65 out of $100 if you are trading 1.0. That means if a spike happens, you can wipe the whole of your account off. That's what just that one just said. The impact of that to actually take a whole 65, which is more than 50% of your account. So what is ideal is to actually trade on an $100 account. If you are trading dump, you can trade the 0.1 or 0.2. Now, why I said the 0.1 or 0.2 is that this market can move a long time before there is spike. And if it actually moves from 32 to 37, you are going to make $50 with 0.1. Yeah, if you trade is 0.1, you're going to make $50. So from 132 to 137, you're going to make 50, a whole $50. That is what you're going to make if you trade is 0.1. Okay, so but it can take a long period of time. And if you are selling it also and you're lucky, just like we have this from 133 to 132, that is around $10. Yes, that is around $10 for you. Do you understand? So that's $10, which is actually safe. And if anybody wants to actually trade, if you have seen a good setup, you can actually trade the 0.2. And if you have made between 10 to 20% of your account daily, I think that will be okay. Now, you can actually use the same moving average cross that I just said. This is exponential moving average two exponential moving average. One is 44 and the other one is 189. You can adjust it a little bit, they are exponential moving average. And the moment you have the moving average cross, that would be a better stable point for you to take your entry. And if you have market cross this other moving average, which is 44, and you take your entry, I'm not saying it's bad, but you can see every area where you have the crossover, the market moved tremendously before there was a spike. So you actually first of all a real movement before there is a drop. And if the drop is not multiple, you can even hold on, even though it may take hours for the spike to be covered and your trade still go more in profit. Now, if you see the running trade is on DOM 200 currently, DOM 200 look faster than DOM 100. So what and the spike we achieve on DOM 200 faster, it will not be the same on DOM 100. I need to say that. So for instance, now this has actually been running for uh, just about 1 hour plus. Yes, for just 1 hour plus until this one, yes, for 1 hour plus. That is when this has actually been running. And if the same is the 100, the 1 hour plus cannot give me $16 at that particular time. It will not have covered the same distance, just like how Crash 300 covered longer distance than uh, other crashes, both Crash 500, 1000. You can name any of the other Crash 300 is still faster. Even now that they reduce how fast Crash 300 is, still faster than every other crash. Just the same with DOM 200, it's faster. Now, when we come to power, power is just like a normal trade, just like a normal indices that you look at your setup or normal forex market that you look at your setup and you take your trade. That can be going up and be coming down almost at the same time. That does not have to be going in a particular direction. Then all of a sudden there is a change. That doesn't happen in power. So both power 100 and power 200. And analyze it, look for your entry and take your trade. Just use your any strategy that you use to trade any of your markets to work. Now moon is just like boom. Now wait and check your opportunity. I did not jump into this moon. I was waiting for the market to actually give me opportunity yesterday and the market didn't. I was expecting it to actually give me, but now you can see that the market is already showing potential, and from here you can actually look at opportunity here. This a level I'm expecting the market to come below. The moment the market come below this level, I'm going to sell. Now, just like you know, it's very important. Even though all these things look give a big potential, which I will still keep updating us. But I'm also checking it. I'm going to check it for at least uh let me say uh 1 or 2 weeks. Now, for you, you can check it for more than a month. Now, I'm going to check it for 1 or 2 weeks because I've been trading boom and crash before very well. And I'm not trading it because somebody just provided a strategy. Do you understand? I've actually take my time to observe it. And this is what I'm also doing with this. I'm not just looking for a strategy to quickly just make money. I'm observing it itself. So I will not advise you to rush. These are something that are going nowhere. You can always capitalize on it. And if this one did disappear, others will not disappear. Remember, it's good to secure your fund than to actually rush and lose the fund. Okay, so calm down and strategize properly. So if you are actually using the moving average cross that I just showed you, if you're using it, don't say because you have a moving average cross and because of that you're going to actually this is moving average cross, that because you have the moving average cross now you're going to jump on trade and just keep trading. No, it doesn't work that way. If I want to use the moving average cross, I should have entered the trade since, probably from there. And since you can see the spread out of the moving average, I believe the market should still go down more according to that. Now if it spike, which is normal that sometimes there is going to be spike, and that is why there should be consideration that you prepare that there may be spike. That's why you don't over leverage. Like because you want to double your account and you now over traded. If you over trade and there is just one singular spike, you can wipe your account off. you can wipe your account off. So I've not seen opportunity on the moon, so probably I will see opportunity again and I will use it. But if we look at it from this one, we see that it's almost the same thing. That with a zero point 0.1, once we get to 101.1, we will already have $10 here. That is what I believe is what this also is also. So if we actually have all of them almost the same like this, working this manner, you can also capitalize on it and actually make use of it. Now the Swift is also like, I believe Swift is just like normal market, but it behaves like jump index. I believe so. Now, just like I said, I'm also new to it, but I believe with common simple strategy, you can actually capitalize on it. So if you actually want to trade the power index, don't use the moving average cross. My advice, don't try to use the moving average cross if you want to trade the power indexes. Don't try the moving average cross. Understand the market itself, then wait for good setup and take your trade. Whether you analyze on 1 hour, you analyze on 15 minutes or any time frame, I believe it's going to actually work out and it's going to actually help you. All right, so that will actually be all about the power indexes. More of it will actually be supplied on our channel and also on our VIP. I told you guys that the VIP is actually open to actually for everybody currently at a very discounted, ridiculous price of just uh, half of the price, which is $15. So you can actually take advantage of it for the rest of this month of June at $15, or you take the opportunity for the rest of the year for $80, and you actually benefit from the signals that we're going to provide, that we are analyzing the market and supplying it to them. And along the line also, the power indexes will also be supplied to them so that they can also benefit from them if they have an account with Quaco. So this is just it, and this is my way of actually telling you that thank you very much for actually staying this far in this video. If you have actually stayed this far, if you have any question you want to ask me about them, if I actually get any free indicator that can work with them, I will make them available. But for now, that I don't have, I will say